South Africa inflation rates increased in the month of May to 4.6%, the highest it's been for 2015. Joining us to give us more perspective now is Kamilla Kaplan, an economist at Investec. Good to have you with us today, Kamilla.
Thanks very much.
Mentioning that inflation figure that we just saw yesterday being the highest in the month of May, I take it this is a cause for concern for South Africa and its economy overall.
Certainly, we've got inflation has been on a modest upward trajectory since reaching its low point of 3.9% in February. And of course, the South African Reserve Bank has assessed that the inflation outlook has deteriorated and that the upside risks to this outlook have intensified.
Kamilla, I spoke to one of your colleagues yesterday, and she said to me that she thought that, I can't remember the time frame, but certainly the peak, she was talking about something like 6.6, 6.7% year-on-year inflation, CPI inflation in South Africa. I look at yesterday's figure and see 4.6%, and I see an economy that's got no demand, so it's got to come from somewhere else. And I look at the rand now at 12.16. Maybe that's a little bit too glamorous on the upside, 6.7. Any chance that that might be revised down because of the fluid events that we're seeing unfolding all the time?
Certainly, the rand's a key risk overall to the inflation outlook, but essentially what's also important to remember is that we have the so-called statistical base effects that are going to kick in the first quarter of next year, whereby we will be calculating any increases in inflation off a very low base that was established at the beginning of this year, owing predominantly to the drop in petrol prices. But the other concern is precisely as you say, there is no evidence of any meaningful demand-led inflationary pressures. So much of the inflationary pressure is stemming from the supply side. So for instance, Eskom's potential tariff hike of over 25%, the rand, and of course we could see a pickup in food inflation owing to the maize price spike that we saw at the beginning of the year on the back of the drought conditions.
What does all of this mean for our local MPC, though? Does it mean that we could expect an interest rate hike a lot sooner than what we initially expected?
Certainly after the May MPC statement, the SARB did convey quite a hawkish tone. It outlined the key upside risks to the inflation outlook, which included sustained rand depreciation, which included above inflation wage settlements, of course the potential for food prices to increase. And the SARB is quite concerned that and of course the administered tariff increases are quite a big risk. So for instance, a 25% tariff increase in electricity tariffs could add around 0.5% to annual CPI inflation. Sure. So the SARB currently is forecasting that CPI is going to breach the 3 to 6% target band in 2016. So it certainly is prepared to hike interest rates owing to the high inflation looking ahead.
Do you think the governor and the MPC can hike interest rates without the United States? Do you think, like everybody else last night around 8 o'clock South African time, they were looking at the pronouncements of Janet Yellen and team and say to themselves, well, again, they sort of put it off. So maybe we've been a little bit too previous with our projections of perhaps 25 or 50 basis points in the next couple of months? Because that's certainly the hawkish tone that I got from that last meeting. Do you think they may pull back, or can they go it alone?
They certainly are mindful of US monetary policy trajectory, obviously because of the implications on the rand exchange rate and by extension the implications for the inflation outlook. However, it would appear from the last MPC statement that the SARB is very much focused on South African inflation trajectory and is quite determined to keep inflation expectations at bay. So on that basis, South Africa could very much go it alone on the interest rate front.
To close off with, Kamilla, growth expectations of 2%, is it potentially attainable in South Africa?
Certainly a 2% growth outcome for this year is attainable. It is very modest growth, but that of course depends highly on the frequency and extent of electricity load shedding, which is obviously affecting the production side of the economy. Of course, the consumers facing headwinds via petrol price increases, the personal income tax increases, and of course the utility tariff increases. So we could see conservative disposable income growth there. And of course, South Africa attaining that 2% growth is partially reliant on a pickup in global growth in the second half of the year.
Sure, a lot of elements at play quite clearly. Kamilla, thank you so much for your time today and for joining us, giving us perspective on South Africa's economy and the recent economic data we've seen. That was Kamilla Kaplan. She's an economist at Investec.